I want to start by asking you, this idea of the region or individual nation states needing to do more to gain some degree of independence and sovereignty around the infrastructure needed, especially in advanced artificial intelligence. How does CoreWeave fit into that? And specifically, what's the role that, say, if Europe advances down this path, which it looks like they are, what's the role for CoreWeave, a company based in New Jersey?
The way that we've built CoreWeave is we've really been client-led. We built out some tooling and then really were very, very responsive to the client demands. And what we are seeing from our clients is an increased prioritization of distributing the infrastructure so that they can do two things, right? One is they can manage the risk of the regulations that would require increased control and sovereignty. And they also want to be able to provide infrastructure for inference in particular that is extremely latency responsive. And so it kind of lays hand in glove with the way that we're kind of going about continuing our international expansion to ensure that our infrastructure has been built out in a way that will achieve both of those goals simultaneously. And so you see us doing that kind of broadly.
What do you see in terms of the demand from European customers in particular, and do you see a degree of urgency around sort of bespoke and very region-specific solutions in terms of the data center?
Yeah, so, I think that the way that the demand comes through the market right now is it's sort of bifurcated in a lot of ways, right? Like you've got one driver of demand that's coming from the most enormous companies in the world, the largest labs in the world, your OpenAIs, your Mistrals, all of them together, and they are very kind of tech forward, kind of thinking about how they're going to address this. And then in addition to that, you've got a host of startups, you've got a host of application layers that are looking to be able to orchestrate their compute that way. I mean, and we just completed the acquisition of Monolith, which was a UK-based company. It's a good example of a company that has a significant distribution of clients kind of outside of that first tier of really, really large consumers that touch a lot of other players. Another acquisition that we did earlier this year was Weights & Biases, another great example. They have a massive breadth of clients, really, that globally, that really are providing us that roadmap. So we're kind of tackling the problem from two sides, right? One is the really scaled players, and those are kind of relatively small in number, always have been. And then there's this groundswell of smaller consumers that you need to be able to address, and you need to be able to help them as they're tackling these problems that are going to come up where they're not going to have the ability to kind of shift workloads around within their infrastructure.
Sure. Around the time of your IPO, there was some chatter on Wall Street about a lack of diversification of your customer base, right? Yeah. Microsoft accounting for a big chunk of it. Obviously, since then, you've announced some pretty breakthrough additional customers, OpenAI, Meta. Talk about, and your stock has more than tripled last I checked, so I get the sense that the market gives it a stamp of approval. I'd like to just get a sense of the degree of urgency for greater diversification to the extent that you have that. Where does it come from and how soon?
Yeah, so look, regardless of what the street said about diversification. Diversification's always been a priority for us. We understand the value in having a broad array of clients, both from the perspective of it stabilizes your business, but also the information that you're getting by serving lots of different clients help you tailor what you're building, where you're building, how you're building, so that you're better able to serve consumers of this type of product. And so I was in an investor meeting recently, and there was a large Microsoft deal that went through with another one of the neoclouds, and I was getting, they were yelling at me. And I was like, look, you can either be upset with me for not enough diversification or not getting the next Microsoft deal, but you can't be upset with me for both, right? Because this is what diversification looks like, right? We're taking our infrastructure and we are making a concerted effort to bring on a broader array of clients. And the 14, the deal with Meta, which is at minimum $14 billion, is a great example of that. The continued participation with two of the three hyperscalers. We have ongoing business with Microsoft. That contract continues to expand. You're actually watching the process of diversification. Now, having said this, and I have said this many times, it is important for people to understand within the concept of diversification is that this product lends itself to large consumers. And so we can achieve diversification, and we have been focused on it, and really I'm very, very proud of the organization's progress around diversification, but it's not going to be 20,000 customers building foundation models. That's just not how this works. Right. And so, it's important for us to be involved with as many of the foundation models as possible. The announcement with Poolside is another great example of how you're seeing such a concerted focus on our part to really make sure that we're as diversified and broad as possible.
Do you anticipate adding other foundation models to the customer mix?
Yeah, I think that you're going to see new players come into the market with new approaches and periodic. I think it is very early innings to call it over, right? And so, I think you're absolutely going to see.
Any that you want to announce here on stage today, Mike?
I think we're doing great.
I do want to take a moment to talk about Core Scientific. This is the acquisition that your board had agreed to with their board, but there's been some roadblocks. Most recently, ISS advising against it. One of their big shareholders saying the price is too low. Talk us through where you stand on. I think the vote is coming up next week.
No.
You have already ruled out any discussion around the price. Is that still your stance?
Yeah. Look, okay. When we've had a long and successful relationship with Core Scientific. We have, starting in 2018, 2019, and that relationship has grown and evolved as CoreWeave has grown and evolved. And so it's been, very, very successful for both parties. I sat down with the management and the board of their company and my company, and we came to a deal that we thought was a fair representation of value. The ratio was correct. It's an all-stock deal, so you really got to look at it as a ratio basis. We took it to the market, and now the market has a different opinion, and that's fine. We're very comfortable that the way that we have priced it is appropriate for us. If there's someone else that would like to step in, they can step in. But we're excited. We think it makes sense. We continue to think it makes sense. It will go to a vote, but you won't see us bump our price or increase our price. We put a lot of thought into how we got to the structure and the deal that we got to.
Given where the spreads are, is there any universe in which you just walk before the vote happens?
So, given where the spreads are, I think you just kind of let this play out.
Okay.
And, if in the next week and a half or whatever it is, the collective shareholder base reconsiders and chooses to view it through the lens that I'm looking at it, then the deal will close.
Yep.
And if they don't, it won't. But like I said, I continue to believe that it is would be a positive transaction for both sets of shareholders.
Yep. So capacity is king in the work that you do, and if my math serves, you're at about 470 megawatts of active data center capacity right now. You had talked about getting that to 900 by the end of the year. Can you get there if Core Scientific doesn't go through?
Oh, yeah. One of the things that's really important to understand here is, like, we control through contract the overwhelming majority of Core Scientific's assets already, right? Like we have been one of, and once again, I'm very proud of the company for doing this. We have been one of the true innovators around many parts of this sector. And so we were the first ones to go into the crypto space and say, hey, they've got this power that can be repurposed. We went through the portfolios of various of the crypto miners, and we chose Core Scientific based on our relationship with them. And we contracted massive amounts of their infrastructure. And regardless of whether this transaction closes or not, that has no bearing on our roadmap. And they were a very, very large part of our portfolio in the early days, and we have systematically shrunk their footprint within our portfolio of data centers to below 25% already.
Okay.
And so, you see us with, we have a massive build out with Applied Digital. We have a massive build out with Galaxy Digital within the crypto space, those two. And then you have, Switch and, Equinox and all of the other data centers. So we're really well positioned with our infrastructure to really be able to execute on our roadmap.
So the 900 is in place. Where do you see that in 5 years?
So we announced just recently that we have 2.8 gigawatts worth of power within our portfolio that is which covers our roadmap for building based on our contractual obligations. I think that you're going to continue to see the scale of this company grow, at an astronomical pace. The clients that we are serving are relentlessly pursuing larger, more diversified new clusters of compute as they continue to build their business. And CoreWeave is a trusted, well-established resource that really is driving massive scale infrastructure throughout the system.
On that topic, there's absolutely demand, ongoing robust demand for data center capacity. That's established. What struck many of us is the way that some of these deals are being structured in sort of non-traditional ways, where people are paying with, taking stakes in other companies. People are paying with computing power chips. There's a circularity. There's a circular nature to the way some of these deals are being structured that has caused concern about inflation of valuations of companies, and concerns that there's ultimately, while there's great demand for the capacity, there's questions about the demand for the end product. And does it justify these outlays, these rather lavish outlays of spending? Can you talk about your sense of, whether there will be enough demand for the end use services?
So I'm gonna tackle that question a couple of different ways. First of all, when you're involved in a massive scale build out of infrastructure, one which overwhelms the supply side of the equation so significantly, it is not unusual to see different parties working together to be able to drive and accelerate the build out. That is, we've seen that in other markets that have tried to deal with the shock load that comes from, we needed no parallel computing, now we need all the parallel computing. That's a very challenging environment to work in, and there's a lot of companies working together. The second thing I wanted to tackle is the concept of the massive spend that's going on. And I just think it's important that people deconstruct what the spend actually is, because I think it's getting kind of lumped into one category and then it's being attacked on that basis. And so when you're thinking about it, I would encourage you to think about it in really three distinct parts, right? The first part is the physical data center, right? That is a long-lived asset, right? That could last for 20, 30 years, the building, the fit out, the cooling, all of those components of it. And so that's a significant component of the spend that's occurring.
Sure. The chips?
I'm getting there.
Okay, all right.
I got you. The chips is the second piece of it, and you've seen CoreWeave innovating around the debt structures that allow us to go ahead and buy, build, deliver, and run the supercomputers that live within these data centers. And the obsolescence curve, you can argue about whether it's 6 years or 7 years or 9 years or 5 years. It doesn't really matter. But the way that we've tackled that problem is we have approached it like every other infrastructure build that's ever really occurred, which is using the debt markets and tailoring the debt products so that you're able to pay back for that portion of the infrastructure, which is the shortest lived portion of the infrastructure within the four walls of the contract and within the obsolescence curve of that infrastructure. And so we go out and we do a deal with Microsoft that's 5 years long. We pay for the infrastructure, we pay for the interest costs, we pay for the OPEX and the CAPEX and everything else, and are left with a significant profit on top of that before the contract with Microsoft ends. And that makes a lot of sense, right? Like that's a reasonable approach, and I think Wall Street is becoming increasingly comfortable with that approach to using debt to structure compute. The third, and that's a part of the market that we are extremely active in. So the first two are really places where. The third part is it's important to understand that you are building companies that will define technology for the next 30, 50 years. And it is reasonable to approach that from the perspective of you're going to invest money right now to build intellectual property, to build products, to build mind share, to do all those things. And it will take more than 5, 7, 10, or maybe even 20 years to pay that back. Whatever, it doesn't matter. And that's a completely reasonable approach to investing in it. And think of like Google, right? Google, built and developed search and then used search to drive its company's profitability for many, many years. And I think that we're seeing a very similar type of build out of corporate value that, parts of it are going to pay back quickly, parts of it are going to take time. And you're going to see that occur through some of these incredible companies that are going to, define technology and define our world. And I think that's a reasonable investment to make.
Mike, in the last few seconds, I want to come back to acquisitions. Core Scientific likely doesn't happen. What are the other holes in the portfolio, and do you expect more consolidation in the neo cloud space?
So we have been very active and acquisitive this year. Right? We bought Weights and Biases. We bought Monolith just recently. We bought OpenPipe. You see CoreWeave from a strategic perspective moving up the stack, decommoditizing compute, providing additional value and services to our clients so that we're stickier, so that we can embed ourselves more effectively with clients and serve them a better product to be able to accomplish what they are. And you're going to continue to see that. And you're going to see us doing that in the US. You see us doing it in Europe. We just Monolith is a UK-based company, or was a UK-based company. Now they're part of us. And so you're going to continue to see us explore different ways of building the software stack and diversifying the products that we deliver to them, much like the diversification that you're seeing within our client base. And we're excited about that. We think that's a very appropriate way to continue to go. As far as the physical infrastructure, Core Scientific was a data center play for us. We've got data centers that we are building in New Jersey from greenfields up. That capacity exists within CoreWeave already, and Core Scientific was an accelerant. But like I said, the right price, it's a good deal.